Okay, we are now live, so welcome everybody and thank you so much for joining us today. My name is Danielle Sutton and I'm the content animator for Plus Acumen, the world's school for social change. We offer over 30 free and low-cost courses that have been taken by over 450,000 changemakers around the world, which is exciting. And today is extra exciting because we are speaking to you about powering the energy access sector, and we're bringing to you an expert who's within the Acumen ecosystem. Leslie Labruto is the head of global energy at Acumen, where she leads our 20 million Pioneer Energy Investment Initiative. And Leslie is responsible for driving strategy, portfolio construction, and thought leadership for Acumen's global energy portfolio. So today we're going to hear all about the experience that Acumen has in the sector and the trends and opportunities, what's been happening, what's coming into the future. So we're really excited to speak about this topic. Before we jump in, just a few housekeeping notes. I see everybody is introducing themselves in the chat already, which is brilliant. Please keep that coming. Let us know where you're joining in from. And please know that there will be a recording that will be sent out to everybody at the end. So you'll receive that in your email a few hours after we finish. So you can check back in with anything that you missed. And we'll also be taking questions at the end. So feel free to include them in the chat as we go. And then we'll also have more opportunities at the very end for you to ask Leslie your questions and also get into some discussion about energy access. So with that, I will pass it over to you, Leslie.
Many thanks, Danielle. It's a pleasure to be speaking with everybody today. As Danielle mentioned, my name is Leslie, and I'm our head of global energy at Acumen. And today is really a chance for us to dive into what is energy access. What is the state of play? Where are the gaps? The sector's come a long way in the last 10 years, and it's really a chance to share what has happened and then where do we need to go in the future, knowing that SDG 7, which is universal energy access, has not yet quite been declared victory. So before we start, I would love to get a sense for who's joined today. Some of you may be investors, some of you may be entrepreneurs, some of you may work in the energy access ecosystem, and some of you may just be interested in learning more. So we're going to start a poll just to understand a little bit more about you guys, and then dive into some of the data. So Danielle, I believe, will be initiating a poll for everybody to take, and then we could jump right in.
Yes, we have the poll going, and we have, if you can see it, Leslie, it's under the polls section.
Perfect.
About 10% investors. Yeah, do you have it there?
I do. Love seeing it bounce around a bit. Great to see somewhere in government, about 10%, 50% other. Feel free to elaborate in the chat box if you want to share where you're coming from. But great. We're going to launch another poll shortly. But why don't we start by jumping in a little bit more of who Acumen is. So most of you probably know I work on Acumen's portfolio team, which is our investing side, and we have our leadership work, and we're trying to really bring it all together. But Acumen obviously invests in seed and early stage pioneering companies that are serving the poor. We're trying to invest really in companies that haven't quite proven out their business model, but we see a lot of potential. They've moved past the blueprint phase of really coming up with an idea, and now they're trying to validate their business model, whether it's in East Africa, West Africa, India, Latin America, and the United States. And what makes Acumen a bit different is that the poor stay at the heart of what we do. And by means of that, we're willing to say that purpose comes before profit. We're willing to see companies scale if they're able to serve the poor, and we recognize that serving the poor may mean lower financial returns, and that's okay. It's challenging the way capitalism works and challenging the way that we think about investing. So I lead our energy access work. Energy is one of our largest portfolios. We also invest in ag, healthcare, and education. But we are actually the largest equity investor in the off-grid market. We've invested in 24 companies. Over $26 million has been invested. And the really impressive thing to me here is, Acumen cannot solve a problem with its own capital and with its own portfolio, but part of the purpose of Acumen is to show a model that works and to crowd in additional capital to say, hey, we've de-risked this business model. Would you, later stage investor, be willing to invest in our portfolio? And you'll see that our companies have gone on to raise $301 million in follow-on capital following Acumen's investment. And that's amazing. That's over 11x what we expected. We always expect our companies to raise additional capital. On average, we hope that our companies can leverage our investment about 5x. So to see 11 is really kind of punching above its weight in the energy access market. But investors have seen that you can generate financial returns and deliver impact for the poor. So our companies listed here span clean cooking, off-grid products, and mini-grids. Our companies have reached over 110 million people, and we're now starting to see some exits from our portfolio. Acumen looks for a 1x return. So if we invest $1 million, we hope to make $1 million back upon exiting in 7, 10, 12 years in the true sense of patience. And on average, you'll see energies also be sort of punching above its weight with a 1.56x average on return, on average across our investments, including write-offs. So quite happy to see this, and we're hoping the trend continues. But let's talk about energy access. So as I mentioned, the sector's changed a lot in the last 10 years. 10 years ago, there were certainly so very few investors investing in the market. Acumen was a real first mover, and there weren't many investors willing to take a bet on some of these entrepreneurs with solar lanterns and whatnot. But you'll notice that just in the last 5 years alone, there's been a massive uptick in capital. There was about $50 million in capital invested in 2012. Fast forward to 2017, just 5 years, and that number increased sixfold. So we saw $300 million in equity and grant and debt capital invested in the market. And what's most impressive is that 800 million people have been served with energy access in the last decade. The number for those who are unelectrified in the world has just fallen below 1 billion, which is really exciting. So from that 800 million people who've been electrified, it wasn't all off-grid, but 45% of that 800 million was from path-breaking startups. So we're seeing that off-grid is a market. It's not contributing just a small fraction to electrification. It's really making a meaningful dent. So before I continue, we're going to launch another poll. So I mentioned how much capital has been invested in the market. I'm curious, Acumen invests obviously in the Pioneer Gap. How much of this capital do you think was seed and Series A capital? And for those that don't know what that means, it really means the first investment round. When a company is raising, their first round of capital, it's usually 1 million or 3 million they're trying to raise. I'm curious if people think on the last 5 years, $15 million has come in, $50 million has come in, or $100 million has come in on the seed and Series A side of things. I see the numbers are bouncing around quite a bit. Interesting. Okay, so about 40% split, moving around a bit between 50 million and 100 million. And then 15 million bouncing, staying on the minority side of things. Well, I have some good news and bad news. While Acumen is investing in the Pioneer Gap, a mere $16.5 million has been deployed for seed and Series A rounds in the last 5 years annually. That's nothing. So we can see that the Pioneer Gap still exists. Investors still aren't quite comfortable with going earlier stage, taking that bet when the financials are still unproven and customers, accounts are still quite low for these companies. Typically revenue for these early stage companies will be well under $1 million, and investors are often willing to invest, but only later. So just stepping back a bit, we see the Pioneer Gap still exists. 840 million people still lack electricity, and 3 billion people still cook with dirty fuels. And you'll see that that's particularly important, that we're really cracking the nut on electricity, but the number of people without access to clean cooking has stayed pretty stagnant. That's largely due to the fact that cooking is a lot different than lighting. To change people's behavior in cooking and to ask them to potentially cook with a different with a different stove, a different fuel source, when they're used to cooking with a certain way, that behavior change is actually much tougher than light. Replacing kerosene is an easier switch for customers than potentially cooking your chapati on a different stove or a different fuel source. So again, I mentioned not much money is going for seed and Series A rounds, and just to show this a bit further, in most of the deals we're doing, Acumen is still the only investor in 71% of our energy deals. So this means that there still is this pioneer gap. We have $300 million worth of follow-on capital, but it's still kind of the lone ranger when it comes to taking these early stage bets. So let's dig into that 840 million number a bit more. I think it's important for us to look at where are these people? Are there specific countries that we can point to? And it's funny, I looked at this when I found the data, and I highlighted these orange or yellow bars because these are the markets where Acumen invests. Acumen has offices in East and West Africa, staffed locally, and we want to invest in markets that we really understand well, where we can provide deep expertise and where we have staff from. But you'll see there's a whole suite of other countries spanning Southeast Asia and Africa that don't have power, that lack energy access significantly. These are the top 40 countries that have energy access under about 57%. And you'll notice some of these markets are really tough. There's Somalia, you'll see South Sudan on here, Burundi, the DRC. It's markets that we are going to really need to think creatively about how energy access can proliferate into some of these really tough markets where the usual suspects and usual investors are not active. So additionally, I want to talk about the state of financing. This map was pulled from an SC for All report. And you'll see that financing flows are in an interesting place. So the black numbers on this graph tied to these high impact countries represents the percentage of people without energy access. The green number shows how much financing was provided in billions to that country via different financing mechanisms, both public and private. But the significant number is the red number, is how much did it change from previous years? Are the financing flows increasing or decreasing? And in my mind, there's too many countries on this list where financing flows are decreasing year on year. The scary thing, you'll see this number at the bottom, is that 80% of all finance flowed into just 4 countries, which means that there is a real imbalance, and this number actually mirrors the off-grid market. 67% of all investment capital has gone to just 4 companies. So we're seeing this concentration of capital, concentration of comfort when it comes to countries, but there's a big job that needs to be done beyond just these 4 companies and these 4 countries. And then you'll see that only 14% of financing went to 16 countries with the lowest electrification rates. That just seems off, and it's pretty natural to think, why is so little capital going to the countries where electricity and electrification is so low? And lastly, Acumen's an investor. We believe in patient capital, but we believe that all roles of capital have a different function. And it's a shame to see that grants are declining in the sector. Less than 1% of all capital allocated last year was grants. And we have to remember, serving the poor is a really tough job. When it comes to electrification, even in the United States, we had the Rural Electrification Program in 1936, and that was all technically grant funded. It was subsidy. And when you're thinking about building out a grid and building out big infrastructure, you have to realize that it is a public good. And as we look at these 840 million people without energy access, we're going to have to start maybe shifting our mind that the public sector can do so much. But really, if we look at it as a public good, they can do so much more and really leverage the capital that's coming in from the private sector. It's just unusual in a sector like this to see private capital coming in before public capital. Public capital really is meant to de-risk the private sector, and in many markets, it's a bit wonky, and the private sector is leading the way. So just going back, why do we talk about energy access? Does energy access even provide anything? Well, we know through tons of data that we've collected with not only our lean data team in-house, but also a wealth of research that's been done, that there are economic, social, and environmental benefits to energy access. And one of the long debated questions is, well, the entry point of energy access is a lantern. A lantern is a very basic solar product, solar lantern, and it can replace a kerosene light. And when I say kerosene light, we're talking old school, fill a lantern with kerosene and burn it, the way it was, I think many of us could imagine, was done a long time ago. but that still exists. And that entry-level product is so important. People say, is that really access? Can we really count that as electrification? Well, at the end of the day, some people the only means of energy that they use is cooking and a basic light. And if you can convert that household via sale from kerosene to a solar lantern, you're saving money that's not spent on kerosene repeatedly, because then you have access to solar. You have health benefits. You're not contributing to dirty, pollutive kerosene being built. And obviously, kerosene is a dirty fuel. And if you can replace that with solar, you have CO2 benefits too. So we see that energy access really is a gateway on kind of the triple bottom line of what everyone looks for on impact. And that's why it's something that has stayed really true and core to Acumen. So obviously need for energy access, and then there's a need for capital. I mentioned before that 67% of investments gone to 4 companies. That means that concentrated amounts of capital are occurring, and we need to think about how we can spread this wealth. Further, when we talk to energy access startups, most of them said that we couldn't actually find the capital we need to. Only 1 out of 5 entrepreneurs said they were able to find the capital that they needed to. So this leaves a bunch of companies, really looking for scattered amounts of capital, while bigger checks that are less risky are being written for a handful of companies. So we see some financing needs. And again, Acumen's investing in the pioneer gap. We see that there are typically the spectrum of what's needed to scale a company is, ideally as a company can start with a few grants or family and friends or angel round just to get you started, even 30, 40K. And then you start moving into investment capital. And typically you have your seed round, and then you have your Series A, your expansion is your Series B and C, and then your scale up is your Series D and E. And these are all investment terms that just basically mean a series is when an investor comes in and invests in a round. It's an equity investment. They're taking ownership in your company, but they're also helping you scale and fuel growth. And really where Acumen's focus is that early stage seed and early stage growth capital. Our investments will be anywhere from $250,000 to $1 million, and then we try to provide $1 million in follow-on for companies who are trying to raise capital beyond. So I talked about this financing gap, and I just want to just go back into how we arrived there, and then just talk a little bit more about these business models that are going to contribute to energy access. So as I mentioned, there's clearly an early stage equity gap, and if you can follow me through these numbers, the first number you'll see is the big number. How much money, grants, debt, equity do we need to achieve universal energy access, which is SDG 7? And according to SE for All, that number is $11.4 billion annually to achieve SDG 7. Now, I mentioned that's all types of capital. If we look at just the equity layer of that, we need $4.2 billion annually of equity to achieve SDG 7, to really scale companies, off-grid companies to where they need to be. And if we break that number down further, how much of the early stage capital do we need? The seed, the Series A's? It's actually a manageable number. We just need $210 million annually of early stage financing to scale a suite of companies up to the point where they can solve the problem in their own country via business models. And yet it's $16.5 million. It's just still a dearth. We're seeing this pithy number, and it really needs to increase. And what it means is that risk appetite needs to increase. Now, the beauty of Acumen's Pioneer Fund is that what we're trying to do is help other investors get comfortable with the business model. Again, we can't solve this problem alone with $20 million of investment capital. What we can do is get people more comfortable with this business model. Say, solar home systems have a viable value proposition. Mini grids, if it's clean cooking solutions, whatever it is, we're willing to be the ones that help show and test with our entrepreneurs the impact and the depth of ability to reach the poor with energy access. And as we start seeing more repeat business models, maybe investors, which we're starting to see, are willing to invest more in the pioneer gap. So we're hoping to see this number increase over time. And again, I just want to say, feel free to launch some questions in the chat box as I continue. We're going to save those for the end, have some questions for you guys, but wanted to keep diving in. So people may ask, what are the business models around energy access? What are the means that we can get there? Well, I'm going to segment in 2 ways. There's on-grid power and off-grid power. And on-grid is something that's absolutely necessary. It's the expansion of the grid. For those who are based in markets where there is a national grid or just grid connections, this is typically funded by the government or even orchestrated by the government. And it means, the grid extension. And it's important and it's necessary. And we see tremendous successes like we did in India with rapid electrification by grid expansion. But the problem is, in many markets, it's too expensive for the grid to connect rural, low-income customers out in the wilderness. It just doesn't make sense for a lot of utilities to think about building new infrastructure, substations, all of the components to connect 100 people here, 100 people there. They just say it just doesn't make economic sense. It's not viable. So that's where the off-grid market comes in. The off-grid market is the ones willing to say, we understand that the grid's not viable. We understand that it would be potentially too expensive. Why don't we try different business models that can actually reach low-income customers? The first one is a solar home system. This is anywhere from a lantern to a solar home system, which is basically a solar panel attached to a battery with maybe 2 or 3 light bulbs and a mobile phone charging unit. This can range anywhere from $150 to $300, which actually can be quite expensive for a low-income customer. So the pay-as-you-go model has emerged, saying, well, $200 is a lot to a low-income customer right now. What if that low-income customer could pay a deposit, and then over time they pay 50 cents a week, $1 a week, whatever they can actually afford on a pay-as-you-go basis. And then over 12, 18 months, 24 months, they've actually paid off the system. And it's theirs. It's unlocked, they own it, and they are now asset owners as well. And what's so beautiful about this is that as customers do repay, they start to develop a credit score, or customers can start building a relationship with a company so that they can have access to credit, financial inclusion, and access to other goods and services, proving that, look, I am creditworthy. While I might not have a ton of capital right now, over time I can pay things off, and ultimately could potentially move up the energy ladder, graduate from a lantern to a slightly larger system. So what we're seeing there is actually that's the business model most are comfortable with. It's the one that you may have heard of: D-Light, M-Copa, Lumos, Phoenix, Bbox. They're all executing the solar home system business model, and it's gained a lot of traction. The green number here is, the blue number that you'll see is how much capital has gone into the sector, and then the orange number is the gap. So actually, while there is still a gap in solar home systems, it's the one with the least gap. Second business model I want to talk about is mini grids. A mini grid is basically a small utility. It's a larger system. They'll have many solar panels, potentially with solar hybrid with diesel, with a genset backup. Some of them have battery backups, but these business models are a bit different in that you have one centralized generation system. So you have a bunch of energy being generated, and then you have cables and wires and poles, just like a normal grid would be set up, connecting a household, and you pay on a usage basis. So just like we get utility bills here in the UK, where I'm based, a low-income customer will typically pay either prepay or pay on usage. And what's different about a mini grid than a solar home system is it's considered more access. You have more ability to plug in. You can plug in a grain milling machine. You can plug in hair clippers. You can plug in a sewing machine. And it offers a chance for income generation to be more viable. That said, they're more expensive. A mini grid to connect 100 customers can cost $250,000. So it's a much different investment than a solar home system, but it's also a much different level of access. You'll see here the gap is really pronounced. So about $37 million of capital was invested into this sector in 2017, and we need about $1.5 billion of mini grid investment capital to really achieve the problem and be part of that energy mix. And the last thing I'll talk about is clean cooking. So clean cook stoves have emerged, have actually been around for over 30 years, but it's basically, is there a way where we can burn fuels more cleanly so that people aren't inhaling dirty smoke in their house, which typically is walled off and can lead to a lot of indoor air pollution. And this is the market that needs a lot of support. You'll see that new business models are emerging with different fuel sources. Pay-as-you-go LPG, liquefied petroleum gas, is emerging and gaining presence in East Africa, where customers get a container that's delivered to them and basically use a cleaner cooking fuel. It's about 1/3 cleaner than dirty fuels. But the crazy thing here is that only $2 million of capital was invested in this market. and about $2 billion is required. So when I think about, energy access gaps, this is one that is really, really obvious and present. And because, again, I mentioned those behavior changes early on that are so prolific and pronounced with clean cooking, I think a lot more attention needs to be paid on this sector, and we're always keeping our eyes and ears out for new business models, new fuel types that can really help reach low-income customers with cleaner cooking solutions. So as I mentioned, we invest in the Pioneer Gap. I won't spend too much time on this, but I did want to give an example of what this means. So one of the companies in our portfolio is D-Light. We invested in D-Light in 2008, over 10 years ago. And over time, between 2008 and 2018, we wound up investing $5 million of capital along its life cycle. And if I look at this, you can see they've done incredible work. D-Light is scaled. They're actually on track to reach their 100 millionth customer this coming year. They've sold over 20 million products. It's really just an incredible success for what a company can do. But if I think about what would have happened if Acumen had given $5 million to D-Light as a grant and just paid the cost of these systems and handed them out, if you do the math, we would probably have seen D-Light reach about 250,000 million customers with a $5 million grant with a solar lantern. So you can really see that investment capital isn't just a handout; it's actually taking equity in a company, but helping build the business, serving on governance, really helping them attract additional capital, fueling growth in a way that that grants tend to sometimes fall short on. So what are we doing about this at Acumen? Well, Danielle mentioned I have the privilege of leading our Pioneer Energy Investment Initiative, which we launched in 2017 to take all this data I just shared and say, where should we be making investments? Where is it strategic? And the first thing that we thought is a no-brainer. We've invested in solar home system business models, Solar Now, D-Light, we invested in Mcopa, and a number of other companies, but we hadn't really made many investments in new markets, places like West Africa, places like Pakistan, where the solar home system market was still very nascent and early. So the first pillar of our investing is how can we invest in solar home system companies that are emerging in new markets? How can we find entrepreneurs with true moral leaderships to take the lessons that we've learned in East Africa and apply them to new markets in places like Ghana and Sierra Leone? The second is this mini-grid conundrum that I mentioned. So little capital has been invested in mini-grids, and Acumen thought, is there a way we can start pioneering a new wave of investments into mini-grid companies? And we're on the lookout. We closed an investment in one of the largest mini-grid off-grid companies in Africa called PowerGen recently, and we're really sticking true to this commitment to say we know mini-grids are going to require large-scale subsidy, the way I mentioned before that utilities typically should be subsidizing power for low-income customers, but we're not going to let companies die on the vine while we wait for these large programs to start up, so Acumen can really play a role there. And last is innovations in energy use. As I mentioned, there's this emerging class of productive use technologies, and this is basically using solar to power a grain mill, to power a solar irrigation pump, to power a refrigerator, and to even power new cooking solutions. So are there ways that we can look at the way people are using energy differently to power appliances that can help with either income generation or just livelihood improvements overall? We launched this. Again, we plan to keep this facility open through 2021. We do have ambitious goals with this program. We hope that our portfolio in aggregate can reach 60 million people in the lifespan of the fund. We're going to keep our investments for the true, Acumen pioneering model of 7 to 10 years. And we do hope that additional capital is leveraged. We're already seeing in our just new investments, these companies are raising capital faster and more quickly than historically predicted. So we think we are also going to outperform on the 5x target of additional capital raised. Again, we look at 10 different markets. You'll see them here. Our newest market to add is Sierra Leone, and we had the privilege of investing in a company called Easy Solar, which is an off-grid solar distribution company selling solar home systems in Sierra Leone, where the rate of unelectrification is one of the highest. About 90% of the population is poor, and 87% of the population is not connected to the grid. layer that on top of the civil war that's been faced there and Ebola and mudslides, you have a market where very few investors are willing to go, but Acumen feels a real calling to see if we can make some investments happen there. And we're really proud of the Easy Solar team, who's just reached their 25,000th customer recently, up from 4,000 when we invested. So we're seeing good growth and scale. Ghana, Nigeria, also out of our West Africa office led by our West Africa investing team. In East Africa, we're seeing deals in Ethiopia, Kenya, Tanzania, Rwanda, Uganda. A lot of mini-grid companies are emerging in East Africa, trying to really test and stress test that business model, as well as some in productive use. And then, of course, in India, with electrification being so pronounced, we're looking at companies that can really make more use of this productive use category. Now that there is electrification, is there ways that we can help plug into appliances, technologies that can work for low-income customers, that can work on a weak or unreliable grid to help with income generation? So I wanted to share some of our investments that we've made. We are actively investing, as I mentioned. You'll see that we've made 8 new investments since launching our PII. Companies like Peg Africa, which was our first, and they're expanding to be the largest off-grid provider in West Africa. Still closing some deals here. You'll see Easy Solar, which I mentioned before, PowerGen, RV Sol, mini-grid companies, and we're really excited to keep our investing work going. In addition to that, we believe that, for any company to scale, you're going to need more than just capital. So we're trying to work with ecosystem partners, really understand what the needs are of entrepreneurs, just not only develop the human capital within companies, but also think about how you can help with hiring support, strategic finance, building right partnerships, and be cross-cutting so that we're not just trying to tackle this problem on our own. So that's what I got, guys. I'm glad we're just at the halfway point. I really want to spend most of the rest of the time discussing some questions. So with that in mind, I wanted to dive into our first question, which is, what questions do you have about the energy access sector? And Danielle, I'm going to turn it over to you two to see what the best way is to facilitate the conversation.
Sure. Yeah, we have had a lot of questions coming in, and I think there's more coming in now. So please keep those coming, and we'll get to as many as we can. So let's see, where should we start? I guess one question came up, and you did talk about this, but maybe worth reiterating just because it is a big foundational concept, and some of the energy terminology can be potentially new for some people. But the difference between the off-grid and on-grid solar power generation, and you did speak to the 3 types of off-grid, but can you just clarify that for us again?
Absolutely. So, when we have on-grid power and people talk about solar being on-grid, what this means is that you have a solar farm or array, and it's usually a lot. It's in the many kilowatts to megawatt scale, and it's plugging in. The power that's produced is directly funneled to a national grid, and that's distributed on a network to make up some percentage of the contribution of energy coming from solar. So typically, when you talk about grid power, you could say, 7% is from solar, 93% is from coal. And when we're talking about off-grid, it means there is no national grid connected. When we talk about an off-grid system, it means something that's not connected to a larger utility. It's really a discrete system servicing maybe 50, 100, it can be even 1,000 people, but they're really not connected to some national power system. So that's the difference. A mini grid can still be powered by solar, but it's on a much smaller scale. So you're not outsourcing that power technically in the off-grid sense to a national grid because it's probably too far away. So solar can still be generated on a much smaller scale, and that obviously comes at a smaller cost, which can oftentimes work more economically for low-income customers in rural markets.
Great, thanks for clarifying. So Natalia had a question. Do you see the potential of using blockchain technology in solving energy access? And have you seen any of that innovation coming through yet?
Yeah, very hot topic. We have a task team at Acumen to really look and think about blockchain in a really thoughtful way. The place that we see probably the most promise would be on the mini grid side of things, because as you develop ledger technology, you can really start to understand where and how your power was produced. And as we build out mini grids, there's less there's less promise on a small. If you're looking at a solar home system, we've assessed that blockchain could actually just create some complications with trying to overcomplicate something that doesn't actually need technically the blockchain to make sense. However, when you're talking about mini grids, you're adding this layer of payments in. And when you're adding payments in, oftentimes there's mistrust with customers as, did my money get to the company? Why is my system not unlocked? I don't have that visibility, I don't have that transparency. But with the blockchain, that unlocks that quite a bit and it increases that transparency. Customers can actually see where along the chain their capital is, especially if it's precious amounts of capital sent over mobile money. So on the payment side, we see that there could be promise. We also just are wary of having blockchain be an experiment with low-income customers and the poor. It's just something that, typically when you're looking at that first mover or innovation, we'd feel a little bit more comfortable if it was piloted and tested out, not on low-income customers, if there is some challenge that's experienced. So we're taking a wait-and-see approach, but we're keeping our eye really closely on this topic. And if anyone has any further thoughts on it, I think Acumen's still just trying to show up to the party and stay as abreast on blockchain as we can.
Fascinating. Yeah, there's lots to learn there, I'm sure. Tiffany is asking, what would you say is keeping investors from filling the gap in mini grids? What solutions are tangible to be explored? And that kind of connects to Dave had a question about recognizing that gap for he's talking about non-early stage. But what is keeping investors from filling those gaps? And do we see the closing in the future or trending, are you able to predict any of that in terms of what's coming next?
Sure. So on the mini grid side of things, what stops investors from investing in mini grids? Well, the challenge is the economics are really difficult. If you look at any mini grid company, the difference between a mini grid and the solar home system business model is that a solar home system is a product. It's a very discrete product. It has a price tag that a customer can afford. It's like buying a phone, right? It's one phone, right? But if you look at the mini grid model, it's like buying a cell phone tower. It's like buying a network of infrastructure. And a mini grid, therefore, is actually an infrastructure investment. Traditional venture capitalists in California are not investing really in infrastructure projects. It's kind of a different league of financing. And if you add layering onto that, let's just play out an example of a mini grid. You have a mini grid set up in rural Nigeria, and it connects 100 rural customers. And if you look at how these rural customers are paying, maybe they're paying $2 a month for electricity. You can't charge much per kilowatt hour. Maybe you're charging 10 cents per kilowatt hour, 50 cents, even a dollar. But people are in rural Nigeria probably don't have a lot of power to use. They're not consuming a ton of power because they don't have much to plug in. So maybe this company is making $2 a month on these customers. If you multiply it out, that's $200 a month. And annually, that revenue is about, plus or minus $2,400. And that's not really viable to offset the cost of what the grid costs to make, or build, which could be $250,000. So, with that math, it would take years, decades to pay off the cost of this grid, and the economics somehow stop working. Now, that is why we believe it's so important for public capital to step in and offer a subsidy for these connections. It's not just a handout, but it's saying, you're doing the service of what the national utility is doing. This is a public good. This is what subsidies are for. This is what tax dollars could be used for. And Acumen feels really strongly that mini grids actually have access to more subsidy capital to make the economics make sense. And to expect mini grids to be commercially viable on their own would actually mean you're asking the poor to pay the highest cost for electricity in the world without subsidy. And there's a moral injustice that Acumen believes is there. So we want to continue supporting the growth of mini grids because of the promise they hold, their ability to reach the poor, their ability to contribute more than just what a solar home system can contribute. But that's what's stopping a lot of investors from investing. They look at the economics and they say, it really seems to work great for the poor. 70% of your customers connected are living, in poverty, but the economics just don't make sense. And that's where the buck stops, unfortunately, with a lot of investors. Similarly to Dave's question with respect to what's keeping investors out, I think fortunately the trend is going the right direction. Excuse me. pick this up. The trend is moving in the right direction. We're seeing that more investors are coming in. We're seeing, again, I mentioned that, the sector grew from 50 million in 2012 to 300 million just in 2017. But the thing is, these are still, that 300 million is a compilation of a lot of big checks, of people writing $25 million checks to a big company. Which is not a bad thing. And there's nothing wrong with supporting winners, in terms of who's been doing a really good job. Let's keep scaling those companies. I completely agree. I think in general, people are getting more comfortable with energy access. I can speak to my own example. We're noticing that some development banks are actually looking at Series A deals, which is unheard of. It means that they've gotten comfortable enough with the solar home system business model, and they're saying, you know what, we're willing to check this out. We're willing to start stepping in the pioneer gap. Because this business model's been around for so long, and we believe that we can help this company scale. So I think it's moving in the right direction. My biggest fear is that people, turn their attention to the next shiny thing, and energy access becomes not important anymore. And what I would say to the development community is, yes, we've made incredible progress. Only 840 million people now lack electricity, but those 840 million people are going to be the hardest to reach customers. So now is time to really double down on energy access and understand how we can use capital creatively, the right type of capital. Even Acumen is thinking about the role of its capital to really think, how can we push the boundaries and be maybe even more concessional, because these customers will be particularly hard to reach in these markets where very little financing is flowing.
That's great. So lots of complexity there impacting all of these factors, right? Which is
not an easy topic for sure.
Yeah, lots of factors. Natalie was asking, one of the early slides said 4.3 million people die from household air pollution, and she's wondering what an example of that would be, and also what time frame that number comes from, or the scale of that. Yeah.
So indoor air pollution is a huge problem. It kills more people than TB, malaria, and tuberculosis combined annually. And people say, what is that and how is that happening? What it means is, if you take a rural household and it's confined, it might have just 4 walls and a roof, and you're cooking on charcoal, you're cooking on wood, you're bringing in firewood, and you're burning it inside your home, which is where typically meals are cooked. All of that smoke is staying in your house. And it's typically women who are doing the cooking, children are home, and that is where indoor air pollution is taking place. And people will just breathe in those fumes and, do that for 20 years, and you're going to see some health ramifications. Our lean data team has done a wonderful job on this. For those who don't know what lean data is, it was Acumen's impact team, and I say was because they've now spun out to be their own entity called 60 Decibels. But they are a team that listens to customers, and it's a low-cost, low-tech way for them to reach out to customers to really understand what their experience has been with a product or service. They produced the Energy Impact Report in 2017. I will make sure Danielle sends that around afterwards, but it goes deep into this topic of indoor air pollution and what alternatives could exist. That 4.3 million deaths are annually from air pollution, and that will span the globe. It spans different markets in India and Southeast Asia and Africa, and that's a number that really needs to have the needle moved for energy access to really be declared a victory, since clean cooking is the one that is the most stuck, as I mentioned. So that's sort of an example, and hopefully that explains a bit more about it. But I'll make sure you have access to that resource because this is where energy access and health really collide.
Mm-hmm. Great. Thanks for that extra context. Should we take a few more questions? We have a lot more we could jump into. I'm just wondering how you're
Definitely.
doing.
My stamina's up, so we're good.
Yeah. Excellent. This is all gold information. So Aditi asked a question that's a bit of connected to what we talked about, and curious if you have ideas about this. They say, after a solar panel completes its life cycle, it generates solar waste due to the disposal of the panels. How do we as global citizens solve this issue? Or maybe another question to ask is, do you see companies working on that side of the supply chain as well at this point, or is it too early?
Danielle, I may be sending around a couple of resources your way
Excellent.
unexpectedly. So I don't know if who wrote the question?
Aditi?
Aditi. I don't know, Aditi, if you read the New York Times article on e-waste, but it is a big topic right now, and it's an important topic. A lot of people say these solar home systems are great, but they only last for 5-10 years, and then we don't want Africa to be the next plastic graveyard of just e-waste. It's just solar home systems laying around defunct. And so there's a couple things we can do. There's a couple things we're thinking about at Acumen, but I completely agree that it is a problem, and it's going to continue to be a problem in this ever-growing world of consumption and growth. If we don't think responsibly about how the products that our companies are selling to customers are going to where they're going to be, then we're not being responsible investors. So the first thing is whenever we make an investment, and one thing we can do is we can really hold companies' feet to their fire in terms of a collection process. In our due diligence, we ask about obviously the performance of their solar home systems, how customers perceive it, but we also ask what happens at the end of a life cycle for a customer. Do they have a telephone number to call when it breaks? What is your process for going out, repossessing a unit, potentially fixing it if it's broken, or disposing of it if it's a dead system? Because these are materials and batteries and solar panels with rare earth metals in them, with lithium, with various components, and so we are actually looking at various recycling programs. There was a company that recently won the Global Leap E-Waste Award called Hinkley Recycling in Nigeria, and we are really encouraging and trying to connect our solar home system companies with recycling outlets so that these solar panels and various plastic components don't just go to waste. There's also innovative companies coming up that we certainly consider in our investing pipeline in innovations in energy use. One that I recently came across actually creates a battery where the cells can be the battery can be open and you can replace the dead cells, because when a battery dies, it's typically drained, but not all cells are dead. And if you can actually train technicians to replace the dead cells, it extends the lifetime of the battery, and you can actually service these batteries on a subscription model, and thus extend the lifetime of the solar home system. This is the kind of stuff that we love to see. It's people thinking about circular economy. You're creating jobs by creating technicians who can replace dead battery cells. And ultimately, you're extending the lifetime of a product for a customer, which is just a win across the board. So I think we absolutely need to think about circular economy when it comes to energy access, and make sure that we are responsible and not creating an unintended consequence of a problem.
Mm-hmm. Great.
Yeah, I think it's a great topic, and I really challenge anyone on this call to think about not just clean cooking, which I mentioned, but also this problem of e-waste and the circular economy. And if you have an investment opportunity for us, please let me know, because we'd love to chat.
Yeah, and like you said, especially as these gaps get smaller and access grows, that will be an increasing challenge to think through. Okay, so I don't think we'll hit all of the questions. Apologies, but I'm just going to.
We have a couple more too.
A couple more, yes. So maybe let's just do one more question for now, and then we can come back if we have more time. Let's see. Well, I had one picked out, but let me just scan the rest. Because some of these we can chat about also in the next question, but. You spoke about investors. So Ronald has a question. I'm curious, how come we have few investors in clean cook stoves and the need is so significant? So you spoke about why there might not be as many investors coming in on the mini grid, but can you speak about the clean cook stove side of things as well?
Yeah, I can. So on the clean cooking side, we see the importance, and if you look at the impact side of a clean cook stove, it's irrefutable that clean cook stoves address the indoor air pollution issue. They contribute to cleaner households, ultimately healthier families overall. The thing is, on the business model side of things, cook stoves have faced more of a problem because they typically aren't as valued in the same way as electricity, and it's seen more as a push product. Families who are used to cooking a certain way if they encounter a new cooking solution, they sometimes think it's interesting. It's typically smaller than the stove that they're used to cooking on, and eventually, they may buy it. And it's less attractive maybe than light, which is sort of a novel innovation for a lot of customers. But the big difference is that the challenge with clean cooking is that there's something that occurs which is called stacking. So what stacking means is a customer may get access to a clean cook stove. They like using their Jikako new cook stove. But what happens is they actually also continue to use their old cooking methods. So it supplements their cooking, but they're not actually replacing their dirty cooking solution. And again, this is because food is really personal. It's cultural. It's cooked a certain way, tastes a certain way. If you ask someone to cook a chapati on a stove that doesn't produce any smoke at all, it's not going to have that smoky, same quality, the same texture. So it just tastes different, and that is actually a big change for customers. And that said, this is not true for everyone. Some people love cooking with their clean cook stoves, but overall, the customer willingness is just a bit lower. And so the question remains: how do you create a business model that really excites a household to switch to clean cooking? One of our companies, Burn Manufacturing, has done a really great job going into households, really understanding their cooking patterns, and trying to get their customer base really understand how they can develop a stove that's cleaner and addresses all their needs and doesn't change a lot of the behavioral patterns. And it's affordable, right? I mean, a stove is not a cheap product. So you try to get a product for $80 and maybe think about financing. It's also really tough to integrate, pay as you go into a stove versus a lighting system. So there's just various kinks in the business model. I think most of the clean cooking sector would agree that there's just still that needs to be done on the business model side and customer preferences and behavior.
Again, so much complexity and so many things to consider. But thanks for more info there. So yeah,
we can skip to the next question. Just for who asked that question, I think it was Ronald. When Danielle sends out the energy impact report from 2017, there's a whole clean cooking sector that talks about the challenges with customers. I really encourage you to read it. It's got some fascinating insights, what we found when we surveyed customers who are using cleaner cooking solutions.
Excellent. That's great.
I know where you're going to take me, Danielle, to this slide.
Perfect. Yeah.
Cool, guys. We have about 8 minutes left. So I'm just curious. I mean, I know I live and breathe this every day, but I'm sure we have a lot of experts who've joined us today. Where do some of you see the greatest gaps and opportunities based on what you learned today to accelerate that energy access gap for low-income customers? Is there something I said that you think that seems solvable, that's achievable? Or is there something that just seems, wow, that just seems so far off from where we need to be? I'd love to hear kind of the group's thoughts as we ruminate and germinate on this question.
Yeah, that's great. And I think maybe I'll pose one of the chat Q&A questions back to you while people are thinking and typing because it relates to this, and it's flipping it back on you. What do you think what emerging technology are you most bullish about in the space for emerging energy accessibility innovations? It's from Yazir.
Yeah, Yazir. So I will actually I'll share something that concerns me more than what I'm really bullish on. I think the market is very bullish on productive use technologies. This idea that we can attach solar to an irrigation pump, we can attach solar to a milling machine, we can attach a solar to a refrigerator, and it's going to change the game, and customers are going to be able to move up the energy ladder, and it's going to be great, right? They're going to start with a solar system, and then they're going to improve their credit worthiness, and all of a sudden, the whole system is going to be unlocked, and we're going to have a whole solar ecosystem. The worry that I see is that appliances, as we look at them, are really expensive still. These appliances have not yet come down in cost. They're still $700, $1,000, $2,000 to get an off-grid solar irrigation pump, solar fridge, solar sewing machine, you name it. And the reason why I'm concerned is because when you start making them, then you say, okay, well, let's just make them pay as you go, and then customers can pay them off over time. Well, I do see a bit of a moral hazard with telling a farmer that I'm going to turn off your pump because you haven't been able to make your payment this month. And it's a vicious cycle. And, there's a lot of unintended consequences. If a low-income customer can't turn on their lights and there's a pay-as-you-go gap because they couldn't afford their payment for lights, it's not devastating, right? It doesn't lead to some catastrophic cliff. But if a low-income customer can't make their pump payment because it was a drought and they didn't make the income they thought they were going to make, then it's a vicious cycle. And I do worry about just the future of how we're thinking about kind of pay-as-you-go-ifying everything. So I'm actually, I'm not bullish on, I think we're going to get there. I just am very cautious and want to see really strong leadership, flexibility, and customer understanding as we look at these productive use assets. Where am I bullish? I should answer your question. You know what? I'm bullish that mini grids will get the subsidies that they need to scale. That's why Acumen's making its investments. I'm consistently impressed with mini grids' ability to reach the poor. As I mentioned, with these appliances, a lot of them will cater to the middle income customers and above. But mini grids, given where they're operating and given how they're they're going to the markets where the grid is not operating. Otherwise, it wouldn't really make sense to build a mini grid where you're right next to the grid. I believe from what we've seen on our results, I'm impressed in their ability to reach the poor. In many cases, again, with power gen, 70% of their customers in Tanzania are poor. And that's impressive to me. A lot of solar home system companies on average can reach about 30% of customers who are low income. So when it comes to doing what's right and really solving the problem, I see mini grids as a great opportunity. It's just going to require some patience as these big institutional development government funders come online with some pretty large checks to make this a reality.
Mm-hmm. Yeah, great. So that gave some people some time to share their thoughts on the gaps and opportunities. So I'll just read out a few and you can speak to them. And then we have a third question that we can try and squeeze in the next few minutes.
Perfect.
So William mentioned emerging tech being around thermoelectric generators that work on stove chimneys. We have one here in Seattle and partnered with Oregon State U to fit it to chimneys. This will unlock clean cooking. That's interesting. I haven't seen that, heard of that before.
A big technological innovation. That's great to read.
Mm-hmm. Wilner says the biggest problem is upfront cost deposit and startup capital grants. So lots of what you were speaking about as well. Sarah shares the greatest gaps and opportunities are with connecting it to public good and then the benefits from this beyond financing. Example, improved health, improved environment, etc., and therefore benefits for countries with improved development. And you cannot always easily put a price on this. However, we also need to reframe it. What are the costs of not acting to accelerate costs for low-income consumers and populations?
This is great. I think that's spot on, especially with respect to reframing it for a public good and speaking that narrative. I think in the impact investing world, we can get so caught up in numbers and dollars leverage, but at the end of the day, really focusing more on the impact of what these solutions bring to the public is key. So I think that messaging and storytelling needs to be addressed.
Mm-hmm. Great. And we have one more gap from Kezia. If I was an investor, I would really want to know how I will get my return on investment for clean cook stoves, which you talked about as well. Opportunities companies are taking up pay-as-you-go or solar as a service. So you spoke to that as well, which is great.
Yeah. Sweet. Well, totally agree. All gaps. Thanks for sharing. So as we wrap up, I know we have 2 minutes. You probably all are very busy and need to head back to your day. But I'd love on the chat if anyone has one big idea for how we can achieve universal energy access by 2030. Any crazy ideas? They're welcomed. I think this is such a great forum for these kind of conversations. Even if it's, I've heard people say drones. We're going to have drones deliver solar systems and solve all the electrification costs. Any crazy ideas I think are welcomed at this point, given we are approaching 10 years away from 2030. So please in the chat do share any big ideas you have as we wrap up the conversation for today.
Wonderful. Yeah, and as people are adding their thoughts, I'll just share a few notes about, so Leslie mentioned a few of the reports that we'll share in the follow-up email along with the replay of today's session. So keep an eye out for that. And someone in the chat also very helpfully mentioned that one of our Plus Acumen courses talks to some of these issues related to energy access with our Designing for Environmental Sustainability and Social Impact course. Mm-hmm. So you'll have the link to that course in the follow-up email as well, and that's a free course on our platform. So lots of extra learning to come after today if your interest is piqued. So that's exciting. And we have our first big idea coming through from Gerson. Can we use manure to achieve universal electrification?
I
There's
love
probably
that.
a lot of that available. So if we can figure out how to use it, right?
Yeah, there's a company called Sistema Biobolsa that we know operates out of Mexico that's doing a great job trying to create big biogas bags from manure and not only solve clean cooking, but electricity. So I think there is definitely an opportunity for manure to make a big shift, even as not pleasant as it is. I think waste is a good way to create the full cycle.
And there's a few interesting case studies in the Designing for Environmental Sustainability about that. So something to watch
Great.
out for.
Beautiful.
Sylvia mentioned geothermal, and Maria mentioned more coordination and funding from public sources, as well as development of favorable government policies. For sure.
Definitely. I think policy is definitely overlooked and more coordination between investors and policymakers is needed.
Yes, excellent. And Claire, we had one more come in. How to achieve universal electrification. Work on how to properly and efficiently store energy for future use. There are some startups working on this, which is inspiring.
Great.
So lots of new innovations in the works, it sounds like, too, right?
Yeah, as battery costs drop and new ways to store electricity come online, I think it could be game changing for a lot of the markets that we look at.
Wonderful. So do you have any final thoughts or words that you want to share, Leslie?
No, I'm so thrilled that everyone was able to join. Please keep interested and excited about energy access. And I think, again, it's time for new ideas. A lot's happened in the last decade, and I think we need a lot more new ideas to really get to where we need to be by 2030. So thanks.
Thanks so much for all of that great information. I personally learned a lot, and there's lots of great ideas coming in through the chat. So thank you everyone for being here today. Keep an eye out in your inbox for all of those additional resources and ways to keep learning. And we will be in touch and hope to see you on another Acumen Learning Lab in the future.
Thanks for joining. Take care, guys.
Bye.
Bye.